Hi guys, this is Dan from the Investment ABC, and in this video I want to give you an update on Nios' progress in 2020 and whether I still think Nio is a good investment right now. For those of you who don't know what Nio is doing, it is a Chinese EV manufacturer which is already producing two models, the ES8 and the ES6, which are both SUVs in cooperation with state-owned Jack Motors. Nio will also launch its third model, the EC6, in September 2020. They also started deliveries of the Haikan model last month, which is produced by a joint venture of Nio and GAC, called GAC Nio. Nio just went public in September 2018 and made since then significant progress. They grew their deliveries from 0 in 2018 to 31,913 by the end of 2019. In the first quarter 2020, Nio already delivered 6,993 cars during a time when the second biggest economy was in a shutdown because of the pandemic. This is very impressive and shows that Nio is growing despite a hard economic environment and fierce competition from domestic rivals and also foreign giants like Tesla. The Nio app and their online sales network helped them to survive during these hard times. Nio had a couple of setbacks in 2019, starting with a recall of 5,000 of its ES8s due to battery problems and too much cash burn in the beginning without having enough sales. Li Bin reacted and reduced costs by building more smaller Nio spaces compared to the bigger Nio houses and managed to increase sales by delivering superb customer service, producing good quality cars and establishing a brand. It is very hard for a Chinese company to operate in the luxury segment, competing with foreign brands like Tesla, Mercedes, Audi, or BMW. Chinese brands are normally associated with low quality, cheap products, and even the rich Chinese know that. So Nio's biggest task was to persuade potential customers that they are different and something special, which it seems they are doing a very good job so far. There are a couple of reasons why Nio is expanding its brand recognition. One of them is that they embraced battery swapping from the beginning and expanded their network rapidly to 131 swapping stations so far. Battery swapping makes it very comfortable for the customer and is a faster alternative to charging, because it only takes up to 3 minutes. Another big advantage of the battery swapping is that you can quickly upgrade to a stronger battery pack if you like. So if someone owns an ES6 with a 70 kilowatt hour pack and wants to upgrade to 100 kilowatt hour, it is no problem to do so. Potential customers who are paying a lot of money for a premium car love the comfort of battery swapping, and therefore Nio is a viable choice to consider for them in the first place. The Chinese government itself is thinking about embracing the battery swapping technology to further increase EV adoption, because not many people can charge their car at home. Because of its battery swapping technology, Nio is the only premium car producer of cars over 300,000 yen threshold that is still qualified for the government subsidies. Furthermore, Nio has gathered a huge fan base with their high quality build and good after sales customer service. More and more positive reviews and YouTube videos are emerging, and owners are recommending the brand to friends and family. Building cars costs a lot of money, so Nio was struggling to get additional finances for quite some time. The Chinese economy has been slowing down significantly, and car sales were down even before the outbreak, so it was hard for Nio to grow sales and get additional funding at that time. The headlines last year were full of negative news for Nio, and many analysts thought that Nio would go bankrupt. But Nio managed to strike a deal with the local government of Hefei. Nio is getting $1 billion in funding if they agree to establish headquarters in the Anhui province and create a new company called Nio China. Nio will put its core China businesses and assets, which include vehicle research and development, supply chain, and its power division, into Nio China. Nio Inc., the American depository shares we investors hold, has to pay also $600 million into Nio China. Nio Inc. will then hold 75.9% of Nio China, while the investors will hold 24.1%. To come up with the $600 million, Nio Inc. issued 72 million shares at a price of $5.95, which is more than Li Bin most likely ever hoped to get 2 months ago. The current stock market rally clearly is beneficial to Nio shareholders because now Nio has enough capital to expand its business in 2020 and concentrate on sales and marketing. One of the major problems and weak points most bears were concerned about was Nio's cash burn and cash problems, which is solved now for quite a while. As of the 31st of March 2020, Nio had cash reserves of 338.6 million US dollar, and together with the 428.4 million US dollar they raised now by offering shares, Nio Inc. has increased its cash position to 767 million US dollar currently. Nio Inc. has to inject 360 million of the 600 million into Nio China by the end of June 2020. Furthermore, Nio might have burned another 250 million in cash in the second quarter of 2020. So Nio might have another 157 million left from the 767 million until the end of this month. Nio Inc. has to pay another 240 million into Nio China by the end of March 2021. So it's possible that Nio will offer some more shares to investors in January or February 2021 if the price of its equity is favorable. The good thing is that Nio China will have 1.5 billion US dollar in cash for its operations and further expansion. If Nio can decrease its cash burn to roughly 200 million US dollar per quarter, Nio has sufficient cash reserves until 2022. On the flip side, don't forget that Nio Inc. will only own 75.9% of future revenues and earnings from now on if things turn positive for Nio from here on. If Nio needs to raise further capital in 2022, Nio Inc.'s ownership of Nio China might shrink even further. Furthermore, the outstanding shares will increase from currently 1.07 billion to 1.204 billion because Nio issued 72 million shares recently and another 132 million through convertible bonds in February and March 2020. After September, those convertible bondholders might sell their shares to book a nice profit because the conversion would be in the low to mid $3 range. But this is just speculation, and who knows, maybe they will hold and don't sell at all for the next 5 to 10 years. To value Nio, I think the best metric would be to use the price to sales ratio. I would think a price to sales multiple of 3 for Nio would be fair currently. So if we conservatively assume Nio delivers around 48,000 cars in the next 12 months with an average price of 50,560 US dollar, that would give us around 2.4 billion in revenue. Nio Inc.'s share of that would be around 1.84 billion US dollar since it owns 75.9% of Nio China. 1.84 billion US dollar divided by 1.204 billion outstanding shares would give us approximately $1.53 per share. If we multiply it by 3, it would give us a current fair value at around $4.60. This is just my personal opinion to come up with a fair intrinsic value for Nio right now, where I really feel comfortable to buy as a conservative investor. Furthermore, I don't want to hype Nio and people get burned because of my video, so I'm really playing it safe here. Although I think Nio's fair value is around $4.60 at this exclusive moment, I'm convinced Nio can achieve a market cap of 100 to 150 billion US dollar in the next 10 years, which would give it then a price of 90 to 140 US dollar due to its immense growth potential. If you take a price to sales multiple of 6.63 like Tesla has currently, that would give Nio a fair value of around $10.14. But in my opinion, Tesla is currently overvalued, so I take a more conservative approach here. Don't understand me wrong, the stock price can fluctuate massively due to hype, on the contrary bad news or just bad market sentiment. As an investor, you have to have a rough idea about the fundamental value of the company. I am very confident that Nio has a very good chance to 10x its current market cap easily in the next decade, but it has to go hand in hand with the fundamentals. Currently, the whole market is in rally mode, and for those of you that follow my channel, they know how bearish I am on the overall stock market. Nio, on the other hand, is one of the very few companies that has a chance to grow despite a recession. In my opinion, Nio has a very bright future, and the whole EV market is in its infancy stage, and China is the biggest EV market. At some point, all the conventional cars will disappear, and there will be mainly new EV cars produced. The established ICE manufacturers have massive problems yet to come up with good EV cars because they're still stuck in their old thinking patterns. Only recently they figured out that they have to do something, otherwise it will be too late for them. Companies like Tesla or Nio were founded as EV companies in the beginning and spent billions on research and developments and on patents for the technologies. They are meant to disrupt and therefore aren't shy of innovating. These companies have the ability to be the new giants in the automobile sector of the future. Governments around the globe are introducing subsidies and schemes to push EV adoption. Recently, even Germany doubled down on EV subsidies, giving €6,000 grants for new EV cars. The German car manufacturer VW and Jag, which is building cars for Nio, formed a joint venture company called Jag Volkswagen. Who knows, investors are speculating that it might have something to do with Nio. This should show investors that EV cars are most likely here to stay and only grow its market share in the future. Another important factor which will boost global EV sales significantly in the next few years is that A, the cost of batteries are getting lower and lower, and B, the range of the batteries will get higher and higher over time. The Chinese battery manufacturer CATL said that it can now produce batteries which will last 1 million miles and only cost 10% more than the current batteries. This will give investors more and more confidence to switch to an EV car soon. Nio will most likely introduce the ET7 in the next year and also penetrate the European market. In my opinion, it couldn't look better for Nio's business at the moment, so it is no surprise that Nio's share price rocketed higher in the last few weeks. Nio's business and revenue will grow over the years, and so will, in my opinion, its share price. If you are a Nio fan and believer in the company, hit the like button, share this video and comment for the YouTube algorithm to support the channel. Bye guys, and see you in the next one.